Hello everyone. So the company we're going to speak about today is Infibeam Avenues. What is Infibeam Avenues? It is a leading financial technology company which offers digital payment solutions and enterprise software platform to large enterprises and government globally. Right. So that's a little bit about the company. Now I'm just going to take you guys through who the founders are over here, not anything more than this. The purpose behind this video is just to educate you all whether this company can be a multi-bagger or not. So let's have a look at the management first. The founders are Mr. Vishal Mehta. He's the managing director. So he holds a degree in operations research and industrial engineering from Cornell University, that is America, and management degree from the Massachusetts, sorry for my pronunciation, MIT, right? That is happens to be, by the way, one of the biggest FII investors in our country. So he spent about 10 years in America and he returned to India in 2007 with many of the colleagues with whom he worked with in Amazon. And then he founded the Infibeam Avenues, right? So it's become one of the largest fintech software payment infrastructure companies in India right now. So that's about the managing director. He's an experienced person. And now Mr. Vishwas Patel, who is the joint managing director. So he's the founder of the payment gateway brand CC Avenue, founded in the year 2001. So that was among the top 3 online gateway platforms in India, and also ranks number 2 in the UAE among non-private digital payment companies. So he too has studied law and was a practicing counsel on the original side of the Bombay High Court. So management in this company looks pretty strong. Now that's a little bit about the management. Now let me take you through the company's fundamentals, which I feel are something to be looked into. So what do we understand through this? It has a market cap of 7,946 crores. So what does that make it? It's a small cap company, to be very exact with you. Stock PE is 39, the industry PE is 42, so it's fairly valued as of now. Current price is rupees 28.50. Looks very attractive, right? Just 28 rupees and 50 paise. I can buy many shares and it make me a lot of money, right? I'll get to that part a little later. The ROC in this company is 6.27 and the ROE is 4.71%. Honestly, guys, this is not good. It should be 10 and above percent in both cases. Okay, dividend yield is 0.18, negligible. 52-week high of 40 and low of 19, so it's in between at the moment, right? Face value 1 rupee, promoter holding 27%, not looking very good over there. Profit growth 45.4%, good. PEG ratio 3.15, that's a little high. It should ideally be 1 and below. Any company's PEG ratio should be 1 and below. If it's 1 and below means it's in a good financial state. Anything above 1, there's something wrong with the financial state. So it's about 3 times more than normal. So the debt is 136 crores, not so much. Reserves 3,324, excellent. So they have more than 25 times the reserves. So that's an excellent sign over here. Free cash flow of 428 crores, excellent again. So that means that's the amount they have after the expenditures and all that. So they have enough money to pay dividends and expand as well. So that's a very big plus point for this company. The free cash flow and the reserves and low debt. EPS 0.74, that's not at all good, by the way. It's really, really bad. Now let me take you all through the price history of this company, which is really important. This was the first fintech company to be listed on the stock market. This was in 2016, just 10 rupees back then. So it went all the way up to 53 rupees in September of 2018, right? That's quite a bit, right? More than 5 times. And from there, it had a terrible fall, right? Came way down to just 6 rupees in October 2000 in such a short period of time, right? And it was hovering around that, it went up again, it was hovering around that 15-20 rupee mark, and it's remained like that for so many years, right? For the past 6 years now. So what is the reason behind it? Let's have a look at the financials before going ahead. Now, take a look at the sales. From 2013 to 2024 till now. 150 crores to 3,400 crores. That's a huge improvement, right? More than 20 times. So they know how to make money. That's one thing you need to look into over here. Now, let's have a look at the net profit. 13, 14 and 15 loss. 16, 17, 18, 19 and 20. 9 crores, 44 crores, 88 crores, 126 crores, 108 crores. That's a huge improvement, right? In such a short period of time. 2021, despite the COVID, 70 crores, 84 in 2022, 2023, 136 crores, 2024, 156 crores, and 12 months trailing, 207. So it's been increasing year by year, right? What is the reason behind it? See, obviously, the online payment gateways are obviously increasing in number. Now, post-COVID, it has become only more. So that explains why the business is going up. And it's only going to keep going up from here on. Now, what's concerning is the EPS. From minus 0.16, it's just gone to 0.74. And despite making 207 crores. That's a little bit concerning to be looking into over here. Now, let's just have a look at the promoter holding. It's decreased from 31% in 2021 to 27% in 2024. Slight decrease. FIIs have remained around that 6 to 7% mark, which is not bad. Public hold over 65% stake, which is okay, not a great thing. Shareholders from 1,80,000 to 8,29,000. It just gives you an idea, right? Most people have looked at the valuation of the company, just 20 rupees. Let me invest a good number of my money into this, and it'll multiply by so many fold, and I'll become rich overnight. This is what most people are thinking, just because of the valuation are invested into it. Now let me give you, a realistic view of this. Unless this improves, the EPS improves, the valuation of this company is not going to go up by much. I'm already giving it to you in writing over here. The stock PE is almost at the industry PE rate. Now, due to a lot of demand and business scaling up and a lot of news circulating, the valuation can go up. It's not that it cannot, it will remain like this, right? There's another company called E2E Networks that went up from just 100 and something rupees to 5,000 rupees in a year's time, right? But the PE is at 240 right now. But that again, its EPS went up quite a bit. That is one of the main reasons behind it. And with 0.7 EPS, I don't really see it going up by much right now. I could even tell you all from this amount, it can go 5-6 times the current value. That's like 150 to 180 rupees. Now, if it does go to that value, you're looking at a PE of 200 to 240. And from there, any negative news can pull it down drastically there, back to a very low valuation. And then what happens? All that cycle will just go down then, right? So my theory over here is very clear. Wait for the company to improve in terms of its valuation, in terms of its EPS going up, right? And the PE coming down. That would obviously interest more buyers in buying in the company, and that would obviously take the price of the company up, right? Now, for people who want to invest in this company, don't put a big lump sum of money into it. I'm not a SEBI registered analyst or anything like that, so don't take my advice just like that. Do your own research before investing into it. But for people who want to invest in this company for the long term, you can invest maybe 100 or 200 shares for now and hold and see how the company is doing. Don't just blindly invest 1,000, 5,000, 10,000 shares and block a lot of your money. When I mean 100, 200 shares, it's just 2,800 to 6,000 rupees, not more than that. It's a small amount of money. That's to hold and see how the company is doing. And guys, don't be under the impression if the price suddenly goes up to 35, 40 rupees, I'm missing out on a profit. You're not missing out on any profit. You're being wise in having invested a small amount of money and waiting and watching and seeing how the price of the share goes up, right? If I'm not wrong. So you can always upward average it. You can always upward average it later. For now, just buy a small quantity and keep it, because I'm betting one thing. This is an IT company, and IT is going to scale up because President Donald Trump will take over January 20th next year. So once that happens, the IT is definitely going to see a big boom. In the next few years, I see the IT coming up again. It was at an all-time low. It's been at an all-time low as of now. The IT companies will now gain traction, and this is one of the companies that is a main player in the payment gateway area, and it's definitely going to see scalability in terms of growth, in terms of profit, in terms of EPS. But wait and watch and see, and buy small quantities for now, and as it improves in all of its scales, upward average it at that time. All right? So that's it for me today, guys. Take care, and y'all have a wonderful day ahead.